Hey, good afternoon, everyone. Marty Missouri here, March 18th, 2022, Friday, with a quick economic update for you. In front of you is our PWA index, and as you can see with this small little notch right here, we made back the 4 points that we lost last week. The overall score is 18.75. Still daylight between here and recessionary conditions, according to our current assessment. As usual, I want to just take you through a handful of graphs, and as promised, these presentations are coming to you in a more abbreviated fashion than you're used to. I want to keep you engaged start to finish and not put you to sleep, and I want to respect your time. So anyway, without further ado, U.S. retail sales were reported this week, and up a little bit on a year-over-year basis, as you can see, but down on a month-over-month basis. Relative to expectations, it was disappointing. We also do track, though, the Redbook weekly survey, and as you can see, that's been steadily on the decline. So we continue to score retail sales as a neutral right here. U.S. housing starts actually rebounded here this last month, and it was slightly in favor of single-family starts over multifamily, essentially 60-40. And then housing permits ticked down just a notch, certainly nothing to get excited about. The Home Builder Confidence Index, or the NAHB Housing Index, as it's officially called, it actually came down to 79. That's 2 points lower than expectations. Looking through the details of the report, it's really, folks, about inflation and fear over higher interest rates. Home builders are starting to express some concerns about the outlook. Right now, things look pretty good. Traffic is decent and so on. But on a go-forward basis, they see some headwinds forming for sure. Initial jobless claims, again, the economic growth rates are rolling over. However, when you look at numbers that are truly historically low, you don't have the look right here that would get you nervous about recessions. These red shaded areas are recessions. And then continuing claims, those people who continue to file claims on a weekly basis, my goodness, you've got to go back multiple decades to get this low. And by the way, this is not adjusted for population. So again, while we do have our concerns, and we've expressed them here, at least at the moment, the labor market is certainly not expressing the kind of stress that would tell you that bad times are in the near-term offing. Other things may be, and of course, the labor market is quite impacted, if not distorted, by what we saw here around COVID and all of the stimulus checks and benefit payments and so forth. And now we have a situation with like 11 million job openings and so on. So no doubt the current complexion of the jobs market is quite unusual. Nevertheless, when we just look at the raw data, it is absolutely nothing that tells us that we need to lose any sleep with regard to recession risk. The Cass freight data, their shipment index, as you can see, saw a nice pop higher this last month. However, expenditures popped right along with it. And again, when you see rising shipments, that's a positive relative to what you tend to see, right, during recessionary periods. And but again, there's some concerning action in here. It's a little bit noisy. And of course, the cost index just screams to that inflation narrative that we're all too familiar with at the moment. The global PMI, JP Morgan aggregates the series of purchasing managers surveys across multiple countries, and that's good to see. Below 50 denotes contractionary conditions, above 50 expansion. And as you can see, we jumped nicely from 51 and something up to a more comfortable 53.4. The Bloomberg Commodity Index, as promised, folks, we did a video right here, and I said, make no mistake, this is not sustainable. And we will see a lot of choppy action, and we think there's notable downside in commodities right here, and that's despite our long-term very bullish thesis on commodities. And then lastly, for index, we also track the CRB raw materials, raw industrial materials index. I like this because this is not subject to futures. These are raw early stage materials. They're considered a real indicator of economic conditions. And while again, we saw that, that hit that the Bloomberg Commodity Index is taking, which does reflect commodities that are very much impacted by speculators These are not. And so you can see we're not having that big correction right here in these raw industrial materials. But this is inflation, of course, and we're seeing it at the gas pump, and we're seeing it at other places. And that does, that can have a serious economic impact. Typically, you see commodities begin to decline going into recessionary conditions, right? You can look at it here, you can see it here, you can see it here, all the way back to the early 80s. Notice, though, that the 2008 recession, you had, and you know this with oil as well, you had commodities, these raw industrials, rising right up into the beginning of the recession. One would argue this, to no small degree, has something to do with this recession that we, of course, know was influenced by inflation in housing prices and, of course, a consumer debt bubble and a mortgage-backed securities bubble and so on. And again, while the trend here certainly does not suggest recession is on the horizon, this can indeed put the kind of pressure on the economy that can precipitate recessionary conditions. And we have to keep that in mind as we compare those two unique historical precedents. So I will leave it there with, again, repeating that we are experiencing a slowdown on a trend basis in economic growth. And we have to keep in mind that the Federal Reserve is now tightening policy into that slowdown because of the inflation pressures that they feel now that they have to get in front of. That is the definition of something that is not a good setup for stocks going forward. So we'll continue to track that daily in the blog, of course, and on the technical analyses that I do for you once or twice a week. So with that, thank you as always for watching and listening. Hope you have a wonderful weekend. Take care. Bye-bye.